Hi, I'm Phil Grande of philsgang.com. I just finished my syndicated radio show, and I thought I'd share something with you. The stock market continues to go up, continues to make new highs. And what's interesting is the economy's making new lows, meaning the economy really sucks. It's really bad. And the internals of the economy are really bad, but nobody's talking about it. Now, what's interesting is as we make new highs, our growth is getting worse. You saw our GDP, we had a contraction of 1%. They revised it, was down to 2.9%. Our consumer spending, they were using, just the winter was so bad, but after the winter, we're really going to accelerate. And we had a 0.2, and they said, if spring comes, we're going to have a 0.4. Well, guess what? We had half of that. The economy is bad because the banks are bad. The economy is bad because the structure that Obama has in place is bad. He has a social structure. He has a structure that his objective is to make the economy worse. And we can see it's working. The more people who are on entitlements, the more people who will vote for liberal Democrats when the elections come. His idea is the more people that he can get into poverty, the more people on entitlements, the more they will control the liberal Democrats, both the House, the Senate, and the White House, all three branches. It's going to be very, very difficult to win the Senate back for the Republicans. It's going to be very difficult to win the House back and to win the White House because there's so many people on entitlements, and that's the way it was designed. And we can see it every day in the numbers. The economic numbers that are coming out are worse and worse and worse. We have a long-term insolvency, not only our country, but in our Social Security, our entitlements. I mean, we are so insolvent, it's crazy. So what they're doing to mask it is simply printing money. And by taking the money and printing it, they're buying the 10-year treasury. And they do it two ways. They buy the 10-year treasury so that you have the yield be very unattractive, below 3%. It does two things. One, it will discourage the Saudis, it will discourage the Nigerians, China who does business with us, who we buy oil from or we buy clothing from. They get our dollars, they come back and they always buy the bonds, but by this little trick, they're not going to buy the bonds because it's unattractive, so it shifts them into the stock market. And that's what's moving the market higher. The other thing that's moving the market higher is by keeping the yield below 3%, then Wall Street can come on and say, look, buy stocks, they're really cheap. Look at the PE, referring to, of course, the PE ratio, but they're really referring to the low interest rates. That's their excuse for telling you stocks are cheap because there's a low interest rate on the 10-year yield. It's all nonsense. And today, with the long-term investing, nobody's doing it anymore. Those days are gone. You can't. When you have the insolvency and you have this long-term insolvency, and especially in the banks, and remember, the banks were propped up. And how they propped the banks up was through printing of money, and they propped the banks up through changing accounting rules. And the way they're propping the banks up is continued printing of money, and they've given $29 trillion to all the central banks around the world to keep on pushing the market up. So we have this all air, there's nothing there. The companies aren't going up because of earnings. Companies aren't going up because of good management. Companies are going up because of $29 trillion. So what does this all mean to you as an investor? What it means to you is you've got to start purchasing individual stocks. That's what it means. And then you stay with a shorter time frame. That's what I'm doing. I'm staying with a shorter time frame from 2 days to 2 weeks. Sometimes I'll switch to 2 months to 6 months. But now it's getting shorter and shorter because here's what I do know. That when we hit March, that was the 60th month now of this bull market rally. On average, when we hit 60 months, that's when the bull market rally stopped. We're seeing the volume is really dropping off. Volatility is really dropping off. So my advice would be to continue to look for good stocks. If the dollar keeps going down, as it's been in the last couple of days, get back to your metals, get back to your mining, do it carefully, don't go crazy on them. But over a long run, the banks are the problem. They really are. Nobody believes it, but they're propped up. So here's what I see. Bottom line, that they're going to continue to prop the stock market up, to continue to mask the bad economy. That means they're going to come back, and I believe they're going to stop with that 85 billion. They're not going to taper much more. I think they're going to start adding back and build it back up. They have no choice. They have no choice. Because if you're going to keep interest rates at 0%, and they can't taper all the way back, because they've got to get money to keep pushing this market up, because they got to mask the bad economy, and they're not going to do anything to fix the bad economy. And the way you fix the bad economy is you get rid of all these regulations, you cut back the taxes. That's how you fix this bad economy. But Obama's doing worse. He's making the taxes go up. He's putting on more and more regulations. He's trying to, with the EPA, that's his SS. He's using that to go against the coal companies. He's doing everything he can to kill this economy. So I would suggest that this market will go higher. And then the day it will crash, just like the other two crashes we had, the dot-com and the housing count, it will come. But it comes at a sudden jolt. And that's what takes down the market 30, 40%. This crash is going to take us down 50%. But if you're with me, we're going to know well in advance when that's going to happen, so we don't have to worry. So see you on the charts. Remember, it's a stock picker's market. Watch the dollar. If the dollar keeps going down, keep going back to your metals. See you on the charts.